Well, the focus is really on the latest slew of economic data we've seen filtered through, PMI data specifically coming in focus. What sense has this given you of the global economic picture as it stands right now?
Well, I think today what we saw was that the European data came out, the Eurozone, and PMI there was relatively flat, not much of a jump there, just as expected, whereas UK manufacturing came down lower than last month, so not a good showing there, and especially our South African PMI that came out today, that is below 50 at about 48.4, and that signifies a contraction, and that's really, we saw business confidence there going down, new sales orders also going down, and that accounts for about 55% of the PMI number. And I think also last month's vehicle strike, or the strike in the vehicle sector, also slowed business and business confidence there. So I think that data just shows that it's very symptomatic of what's going on in the world at large, and where manufacturing is not that great. But on the other hand, in Chicago yesterday, the Chicago manufacturing number came out and it was far stronger than expected. And I think all eyes right now on the US manufacturing ISM that's coming out later on today, where the expectations, I think if you look at where the US futures are trading right now, the expectation is for that number to be very high.
Of course, it's in this context that we've seen markets globally rallying, both in Europe and the US having a good quarter specifically, and the JSE not being left out either. Yet we've had Ben Bernanke reiterate that, the US economic recovery remains disappointingly slow, with unemployment the big concern at this stage, that remaining too high. So where the fundamental picture hasn't changed that much, Ntombenhle, are you seeing the rally that we've been witnessing so far as justifiable?
It's a very tough one, that one. It seems that the bulls are definitely out and are going to, push this market up, regardless of what the economic data says. I mean, there has been a bit of silver lining in some of the recent data that has come out, especially from the United States. But, look, it seems to be railing regardless of the fact that the fundamentals are not there, that, the United States remains in problems, that the European, the Eurozone community also remains in problem. European banks are in problems, are struggling there, and it seems that the bull market or the bulls out there just don't seem to put so much weight on that fundamental data.
Of course, when it comes to the European situation, we've seen Spain's banks being downgraded yet again by Moody's. I mean, to what extent is that working to offset sentiment, and to what extent are the markets focusing on that still lingering overhead?
I think it does serve to cap a little bit the gains that we've seen, because people are conscious of the fact that the world is in problems, and Ireland came out saying their banks will need about 40 billion euros to be rescued, and as you mentioned, Spain's downgrade also, and I think that it is going to take a little bit of a while, and for that economy to recover, and it does serve to limit some of the gains that we see. I suppose perhaps it could be far stronger rallies that we're seeing going forward.
Locally, a lot of the rally that we have seen being attributed to window dressing, where we saw a lot of portfolio managers at month end making adjustments to their portfolios, and to an extent evident in the kind of performance we're seeing today, one would assume, where the JSE is backing that global overall trend and seeing somewhat of a pullback.
Well, I think what we've seen is particularly to the JSE is that September was a strong month also in terms of M&A activity, mergers and acquisition activity. So, there's, positive sentiment towards South Africa at the moment. But yes, the past week, I do believe that there was a lot of window dressing, month end, quarter end. So maybe portfolio managers wanting to boost their holdings a little bit. But yeah, I think, we going forward, we will still be reliant mainly on what happens in the United States as well as the rest of the world, and not so much really what happens in our economic side. I mean, we saw today with the disappointing manufacturing data that came out, the JSE didn't react, and is really following the US futures, and based on the expectations of the manufacturing data that's going to come out of the US today.
Of course, looking at the week that was, a lot of corporate action driving some of the activity we've seen in the industrial space. Most specifically, we've seen our retailers have a strong run, and that to a large extent on the back of that news that has come to the fore surrounding Walmart and its possible takeover of Massmart.
Yes, it's been a very, very strong rally there. I mean, in terms of M&A, we've had the Nedbank, HSBC talks, and the Massmart and Walmart talks, and now also Impala and possibly buying the Royal Bafokeng Platinum mine there. So, you know, lots of activity going on there.
What are you making of that possible Massmart transaction coming to the fore, where we've seen Fin Week 24 article reiterate that we're going to see COSATU coming to the fore and actually opposing this possible transaction?
Yes, I mean, you know, it is a good investment in South Africa. I believe they are buying a very good company, but COSATU is concerned that the labour practices of Walmart have not necessarily been good, and their track record perhaps in that side of the business has not been good in America, as well as the rest of the markets that they operate in. So I think their concern there is that, you know, they don't want to be bulldozed. Their concern is that there shouldn't be major retrenchments should they take over. And I think, you know, they're coming out to say that Walmart, we do know who you are. We've seen what you've done in the rest of the world, and we'll be watching you coming into South Africa. And their interest of the interest of COSATU is to towards the labour market, and especially in the retail sector.